Hello and welcome to another session of hedge fund accounting. Today we are going to discuss fundamentals of swaps. What are the takeaways that we are going to look at from this course? So our objective will be to understand what is a swap. We will go over different type of swap products that the hedge funds do trade in. Then we will look at the benefits of investing or trading in swaps, identify the key elements of a swap P&L, like what happens, how do you make money out of trading in swap, okay? Then we are going to look at how do you price a swap position, how do you reconcile it against counterparty, and finally we will look at the accounting entries necessary for swap accounting. We are going to split this course into bite-sized pieces. First, we will go over an overview. Then we will look at different type of swaps. Then we will look at accounting entries associated with those specific type of swap products, like how to open a swap position, how do you close it out, and in the process, how do you book the income, how do you book the interest and dividend on swaps, okay? Because those are the income components on a swap position. Then how do you price it? And as I just mentioned, that how do you calculate the swap performance? That is the swap P&L. When we say swap P&L, it comes from the swap performance, okay? And then there's a very important component of trading in swap that you have to pay some kind of financing charges if you want to trade in swap, if you want to hold a swap position, you have to pay for swap financing, okay? So we'll look at what is swap financing, how is it calculated, and then reconcile with the counterparty. And also, which is very, very important, we will look at how are we going to report the swap positions and the income from swap on a fund's financial. That is very, very important piece that we will get to discuss later in this course. Before we go into the detail, let's do a quick overview. What is a swap? As the name goes, swap means exchange. What are we exchanging? We are exchanging two cash flows. So swap is an agreement between two counterparties to exchange two cash flows. These cash flows are payment streams. These are called two legs of a swap. So one party is receiving, another party is paying. What really happens is that the differential between the two cash flows, that is what settles on the settlement date of a swap. Now, swaps are not exchange traded products, so these are not standardized. These are over-the-counter derivative products. So who designs those products? Typically the intermediate banks or the prime brokers are the ones who work with the hedge funds to design a very custom-made swap agreement for the hedge funds. Okay? Now, because the terms are not standardized, swap may settle whether monthly or even quarterly. Okay, so swap settles or resets periodically. With all these complexities, it is not easy to book a swap transaction without knowing the terms in detail. So as a hedge fund accountant, we must look at the swap agreement. We must look at the swap terms before even going to book a transaction, book the swap trade. Now let's look at why do hedge funds trade in swaps. Lately, swaps are becoming very popular with the hedge funds. We know hedge funds do trade in equity, bonds, but why swaps? What's the advantage? Because of a lot of things. First is flexibility. As we know, swaps are not exchange traded products. These are tailored to individual needs of the hedge funds. So a hedge fund can actually negotiate the terms with the broker. Okay? And that is how they enjoy the flexibility with the swap products, with the swap agreements. Secondly, liquidity. So trading in swap offers the hedge funds to gain synthetic exposure to the equity without actually having to go long on the equity. So when you trade in a stock, trade in equity, you have to buy the stock outright. You have to do an outright purchase. But when you are trading in an equity swap, you enjoy the exposure, but at the same time, you do not have to pay for the stock right away. Okay, so that's how you enjoy better liquidity if you trade in a swap. At the same time, mind it, you get to enjoy the benefit from the income on the underlying, okay, income derived on the underlying, okay, like dividend on equities, okay, or interest on the underlying bond. So you do get to enjoy that, but you don't have to buy the position outright. So definitely this is a great way to have a better liquidity, and that is why swap is becoming very, very popular with the hedge funds lately. Now, third is risk hedging. When we will discuss interest rate swap or FX swaps, we will see how the hedge funds use swaps to hedge the FX risk, or even dealing with the risk of interest rate going up. We will get to discuss this in more detail. And then lastly, speculation. Because swaps require little capital upfront, they give fixed income traders a way to speculate on the movement in interest rates while potentially avoiding the cost of long or short positions in treasuries. So this is a great way to go for the speculation. Okay. Now, it's not all good stuff, right? So there are certain cons as well. Okay, it's not just it has only benefits and it's great product with lots of benefits and there is no downside. Of course, there is downside. Like any trading in any other product, there are certain downsides or cons of swap trading. First of all, counterparty risk. There could be a lot of counterparty risks in a swap agreement, a swap trading, because it is not an exchange traded product. It's not a standard one. There is, at the same time, with this comes a limited liquidity because you are dealing only with the counterparty, right? Okay, so there is a lot of complexity around the terms. There could be some lack of transparency, again, around the terms of the agreement. And given that this is not traded on exchange, there could be a limited liquidity in the market. So these are some of the cons of swap trading. Type of swaps. Now that we have a good overview of swap products, how it works, why do hedge funds trade in swaps, let's look at what are the different type of swaps available to trade in. Interest rate swaps, currency swaps, equity index swaps, commodity swaps, total return swaps. These are some of the very popular ones in the market. Okay, but we have limited time to discuss in detail all of these swaps. So we will go with the most commonly traded ones, which are like currency swap, interest rate swap, and total return swap.